So look, here's a question. Is the actions of central banks supporting the economy or distorting markets, or a little bit of both?
Both, I would say. It is supporting because of the injection of excess liquidity enables banks to meet requirements, demands from their customers to have access to more credit. In addition, you have the other transmission channels that I'm not going to cover in detail. But the other important thing, as you mentioned, is distortion of markets, because you could say that credit risk is becoming underpriced.
We all pray for economic recovery. We all want economic recovery. And when that economic recovery comes, will the central banks be able, will they find it very difficult indeed to actually pull back this enormous support mechanism, this historic support mechanism that we've witnessed?
Well, that's going to be the key challenge, of course. I think what we're observing in the recent weeks is there's a significant decline of uncertainty related to the vaccine. Now, there is hopeful developments with respect to the two cliffs, the Brexit one and the fiscal stimulus cliff in the US. But then we will observe as we progress in 2021 that uncertainty is migrating, and it is going to migrate towards the latter part of the year, towards starting to anticipate a change in guidance from central banks. One area that is specifically important in that respect is when the ECB will announce that it will stop its net purchases of the pandemic emergency program.
William, the note from you that I think piqued most interest for me was pent-up demand to trigger inflation pickup. And right now, I don't get the sense that anybody in the markets is positioning for a pickup of inflation. Everybody seems to think that we can have a pickup in economic activity next year without the consequences of rising inflation and the hit that will be taken in bond markets. Just walk us through your argument. Why do you think this time it's different and that the stimulus will result in a pickup in prices?
Well, first of all, inflation, I'm a macroeconomist and I look at it at the macro level in the aggregate. So typically that is the Phillips curve and all the likes. However, at the current juncture, it is also important, given the specificity of the recession that we have experienced, that we also look at more microeconomic developments. One point to illustrate that, when you look at the beige book, there is reference to ongoing supply disruptions, kind of a lagged effect of what happened earlier on in the year, and that is pushing to more to higher prices, higher transport prices, which are reflected in the CPI. My point about the pent-up demand is that there will be areas, think of hospitality, restaurants, hotels, travel, and so on, that have been suffering so much, and where people will be very eager once they have been vaccinated to go out. And that means that you are then in these sectors going to move into a seller's market, because the price elasticity of demand is going to be very low. People will be very keen to go to a restaurant, even if that costs a bit more, or to hop on a plane for some exotic destination, even if the ticket would cost a bit more. So in these sectors, you can expect somewhat more inflation. This is a temporary phenomenon. In the aggregate, we're still suffering from negative output gap and all the likes, unemployment issue. But in certain sectors, we have to be cognizant of that phenomenon. And it can influence market expectations, of course, the steepening of the curve and so on.
So just to be very clear, this is a supply side phenomena, and that's ultimately why we end up with rising prices, because we've seen a collapse in capacity in some sectors as a result of the impact of the pandemic.
Well, it's not only the collapse in capacity, that is one element. The other element is that capacity has been unused, and then demand has been put on hold. And it's the fact that people can go out again and travel and all the other elements that I've given as examples, that is going to give an opportunity for those who are providing the services to charge slightly higher prices, and actually to make up for the loss in revenue that have suffered from in 2020.